Imagine getting paid every time you spend money. Airline tickets for free, hotel stays for free, cash back just for buying groceries. That's the promise of credit card rewards. Banks advertise them everywhere. Earn 5% cash back. Get a free flight. Receive $750 in bonus points. But here's the question almost nobody asks. If banks are giving away all this money, how are they still making billions of dollars every year? The answer reveals something fascinating about how the credit system really works. Today on Money Science AR, we're going to uncover the truth about credit card rewards, who actually benefits, who loses money, and how smart credit users turn the system in their favor. Welcome back to Money Science AR, the channel where we break down complicated financial systems into clear, practical knowledge you can actually use. If you're new here, this channel is all about understanding how money works behind the scenes. Credit systems, banking strategies, investing principles, and the habits that build long-term financial strength. If that sounds valuable to you, consider subscribing and turning on notifications so you never miss an episode. Now let's talk about something millions of people interact with every single day: credit card rewards. Cashback cards, travel points, sign-up bonuses, they look amazing on the surface. But like many financial products, rewards programs are carefully designed systems. And once you understand how they really work, you'll see something important. Credit card rewards are not a gift from banks. They are a business strategy. And depending on how you use them, you can either benefit from that system or quietly pay for it. Let's look at two very different credit card users. We'll call them Alex and Jordan. Alex loves credit card rewards. He signs up for cards with big bonuses. He collects airline miles. He earns cash back on everyday purchases. Every month, Alex uses his credit card for groceries, gas, and online shopping. But here's the key detail. At the end of each month, Alex pays the entire balance in full. He never carries debt. Because of that, Alex earns about $900 per year in rewards, cash back, travel points, sign-up bonuses. From Alex's perspective, the system is fantastic. Now let's look at Jordan. Jordan also loves rewards cards. But sometimes expenses pile up. One month he carries a balance of $2,000. The interest rate on the card is 22%. By the end of the year, Jordan has paid hundreds of dollars in interest, much more than the rewards he earned. And this is where the credit card business model becomes clear. The rewards Alex receives are largely funded by people like Jordan. Banks design rewards programs knowing that many customers will carry balances and pay interest. This cross-subsidy is one of the reasons rewards programs exist at all. But the story doesn't end there. Because when used correctly, rewards cards can actually support something very important: excellent credit behavior. To understand why credit cards are so powerful financially, we need to look at how credit scores are calculated. Most lenders rely on the FECO scoring model, which evaluates 5 major factors. Payment history, 35%. This is the most important factor. Every on-time payment strengthens your credit profile. Missing even one payment can lower your score significantly and remain on your report for years. People with 800-plus credit scores almost never miss payments. Credit utilization, 30%. This measures how much of your available credit you are using. For example, if your total credit limit is $10,000 and your balance is $3,000, your utilization is 30%. High scorers usually keep utilization below 10%. Credit cards actually make this easier by providing flexible limits. Length of credit history, 15%. The longer your accounts stay open, the stronger your credit profile becomes. This is why many people with excellent credit have accounts that are 10, 15, even 20 years old. Credit mix, 10%. A healthy credit profile often includes a mix of credit types: credit cards, auto loans, student loans, mortgages. This shows lenders that you can manage different types of borrowing responsibly. New credit inquiries. 10% applying for multiple credit cards quickly can temporarily lower your score. People with elite credit tend to apply for new accounts strategically and infrequently. Now, here's something interesting. Many people with 800-plus credit scores prefer rewards credit cards. Not because they love spending money, but because they understand something about how financial systems work. They already plan to buy groceries. They already need gas. They already pay for travel or bills. Using a rewards card simply adds a small financial benefit to spending that was going to happen anyway. For example, a family spending $2,000 per month on everyday expenses could earn $400, $800 per year in rewards. That's not life-changing money, but over time, it adds up. The key difference is behavior. High-score credit users follow a few important principles. First, they treat credit cards like a payment tool, not a borrowing tool. Second, they never carry balances long enough to generate interest. And third, they monitor their credit profile carefully. In other words, they use the system without letting the system use them. Credit card rewards can be valuable, but there are also traps. The first trap is overspending. Psychologists have found that people tend to spend more when using credit cards compared to cash. Rewards programs can amplify this effect. If someone buys something unnecessary just to earn points, the reward is meaningless. The second trap is high interest rates. Many rewards cards have interest rates above 20%. Carrying a balance for even a few months can erase the value of an entire year of rewards. The third trap is annual fees. Some premium rewards cards charge annual fees of $95, $250, or even $550. These cards can be valuable if you fully use the benefits, but if the perks go unused, the fee becomes an unnecessary cost. This is why financial discipline matters far more than the rewards themselves. Let's return to the people who maintain exceptional credit scores. They tend to follow a consistent set of habits. Habit 1. Perfect payment history. They pay every bill on time, every month. Often they use automatic payments to remove the risk of forgetting. Habit 2. Low utilization. Even if they have high credit limits, they keep balances low. Many pay their cards before the statement closes, ensuring that low balances are reported to credit bureaus. Habit 3. Long account history. They avoid closing old credit cards unnecessarily. Older accounts strengthen credit history length. Habit 4. Strategic credit use. They apply for credit when it makes sense, not impulsively. Habit 5. Responsible spending. Most importantly, they treat credit cards as financial tools, not extra income. Rewards are simply a small bonus for disciplined behavior. If you want to improve your credit score while benefiting from rewards, here are a few practical steps. First, always pay your balance in full each month. This prevents interest charges and protects your credit score. Second, keep your utilization low. If possible, stay below 30% and ideally below 10%. Third, review your credit report periodically to ensure accuracy. Errors do occur, and correcting them can improve your score. Fourth, choose rewards cards that match your spending habits. If you spend more on groceries, choose a grocery rewards card. If you travel often, a travel rewards card may make more sense. And finally, remember that the goal is not just rewards. The real goal is building a strong financial reputation. So what's the real truth about credit card rewards? They are neither a scam nor free money. They are simply part of a financial system. For people who carry debt, rewards can become expensive. For disciplined users who pay balances in full, they can become a small financial advantage. But the biggest benefit of responsible credit use is not the rewards. It is the credit score you build over time. A strong credit score opens doors, lower interest rates, better loan approvals, greater financial flexibility. And those benefits can be worth far more than any airline miles or cash back. If you found this video helpful, take a moment to hit the like button. It really helps this channel reach more people who want to understand how money works. And if you want to keep learning about credit, investing, and financial strategy, subscribe to Money Science AR and turn on the bell icon so you never miss the next video. Share this video with someone who's trying to improve their credit or understand credit cards better, because financial knowledge is one of the most powerful tools you can have. Thanks for watching, and I'll see you in the next episode of Money Science AR.